Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hey everyone, welcome to the Small Cap Discoveries conference call. Today on our call, we have CEO David Kratochvil from BQE Water. BQE trades on the TSX Venture Exchange under the symbol BQE and on the OTC under BTQNF. The company is trading at $31.50 with a small float of 1.24 million shares outstanding, or about a $39 million market cap. I'd now like to hand it over to Paul Andriola.
Great, thank you, Trevor. I'm very interested to hear what David and Peter have to say today. BQE, Trevor and I both had a chance to talk to the management team well over a month ago, but I think there's a couple of things I like here just off the start is that BQE works in the ESG space, so environmentally sort of driven business. But also, captures the mining industry. So, I think two areas that are seeing, well, mining is always a cyclical business, but seeing a resurgence here recently. And of course, ESG, very, very topical and strong sector as well. So I'm very happy to have David here. David, I'm going to hand it over to you and let you start your presentation.
Okay. Thank you, Paul, for the introduction and for inviting us. And thank you very much, everybody, for joining the call today. We're here today to talk about recurring revenues from water. And just briefly about BQE. We're a company that specializes in the management and treatment of mining and metallurgical wastewater streams. And our business really has three major pillars. It's driven by technological innovation, customer-centric business model, where we basically have all our contracts are performance compensation based, and offering a single point of accountability for water throughout the life cycle of these projects. And really consider the water requirements for the different mining and metallurgical projects holistically through the life cycle costs and risk-adjusted life cycle costs. So why would you want to invest in BQE? Here we're listing the key components of I think the value that we have and we bring. One is a very unique IP. So the company has been around for now over 20 years. We've developed very significant intellectual property, patented as well as know-how, trade secrets in some of the main areas that are on the forefront of the regulatory pressure on the mining industry now, including sulfate, selenium, cyanide, tailings, recycle, etc. We have a very strong pipeline of projects that will lead us to growing recurring revenues from water. We have very large addressable market. Many of our clients are the leading producers, base metal, precious metal producers. And of course, we tailor our services to the needs of our clients, and we have a positive cash flow. 60% of our revenue is actually recurring, and it's growing, and we have no debt. Just for you who are not familiar with the mining space and really the role of water in mining, water really intersects major different aspects of the mining business. This is critical to the mining business. It starts with the production needs. I would say over 90% of all metal extraction happens in water. You need water to actually produce metals. But of course, in that process, water gets contaminated And then that contaminated water is now subject to very strict governmental regulations. And, following the failure of the Mount Poly tailings dam, for example, storing of contaminated water on mine sites is now considered a significant environmental liability that the companies need to deal with. So storage as a solution is no longer acceptable in many jurisdictions. And finally, there's basically social sustainability aspects where in order to receive not just government approvals, but to make the mining project socially acceptable, you actually have to demonstrate no harm. And here in the picture, I'm showing the double-headed trout from the Elk Valley in eastern BC. That's the result of selenium poisoning. So that's really the mining water opportunity for BQE. The way I kind of look at the mining market is I put it into 3 buckets, okay? And we can start in the middle because everybody, when it comes to mining, everybody thinks about the producing operating mines. The mine lives are very long. Typical base metal mine these days got a mine life of about 20 years, precious metal mines about 10 years. And the important thing is that, when you look at these projects, they're really, based on this mine life, they're really long-term projects. Interestingly, when the mines stop producing, in many cases, it's impossible to somehow immediately stop the contact between water and the sources of contamination. So in many cases, the pollution, the generation of polluted, contaminated water continues way beyond the useful production mine life. And that's why in the second bucket, in the closure, we look at time horizons of 20 plus years to actually clean up the mine to a point where you can actually walk away. And in some cases, you can never walk away. For the closed mines, it's not just the big major mining producers, but also governments that are our clients. Obviously, for the operating mines, it's all small, mid-tier, and top producers. But interestingly, mines in development also are a critical component of this market in a sense that you have to realize that for every operating mine, right, that goes into closure, there has to be a replacement. There has to be a new mine coming on. And there is many mining projects that will actually never make it into an operations mine. But there are many projects, in fact, in development and various stages of assessment. And, it is during these stages, before the mines actually open and go into operation, that the need for expertise of someone like BQE Water is needed, because you have to plan, you have to convince the regulators you've got the right measures in place to deal with water and with the contamination long term without generating any liability or harm into the environment. And when you think about that market, between Canada and the US, that's about a quarter of the operating mines. A typical ratio of the closed mines to operating mines is about 10 to 1, because there's a lot more closed mines. It takes a lot longer for them to close properly than operate. And then you have about 4 mines in serious stages of development for every one operating mine, because not every mine makes it. So when you actually tally it out on a global scale, you're talking about on the order of tens of thousands of projects, okay? Sorry, somehow okay. I guess when it comes to BQE, it's important for you to understand how we extract value from this market, and how we really generate value for our shareholders. We do that through a service provider type of business model. And the services come in various shapes and forms. They fall into one of these 3 buckets. One of them is basically the upfront consulting. This is really the piece where we're identifying potential problems, solutions. You can think of the blue circle as the operations. That's really the piece where when we identify a solution, we design a plant to treat, manage water. We actually go into operations. We have an operations group that provides operations services, and those services continue as long as the water is there to be treated. And then we have this technical innovation piece, which is really intrinsically linked to both the consulting and operations in a way that you can imagine. There are many people who are selling equipment and selling packaged plants into the mining industry, but they don't operate them. And we do, and we learn from these operations. So in fact, the operations piece is super critical for feeding, the sustaining innovation, understanding what works, what doesn't, how to do it better, to continually improve our products to stay ahead of the competition. And the consulting piece is equally as critical, because that gives us the opportunity or window into what's coming. What is going to be the future need of these companies? Because a lot of the consulting is linked to the development projects that will become one day operational in 5-10 years. And that gives us the window into the future and allows us to develop really technologies that are disruptive technologies, like our selenium treatment, which is truly disruptive. So hopefully now you have a better understanding of the importance of intellectual property in our business. We developed a number of systems that specifically target certain types of contamination for heavy metals, biosulfide, chemsulfide processes, for sulfate, for cyanide recycle, we have the SART process, and for selenium removal, we have the Selenex process. That's our latest development. But that unique IP and expertise is not the only thing that we do. So BQE Water is not a provider of these 4 types of technologies. Yes, we can provide them when needed, but in general, we're treating water and managing water based on what's needed. And sometimes these technologies give us unique advantage, and we use them and deploy them. Sometimes we have to combine them with other systems, and sometimes we just use conventional systems, whatever makes most sense for the client in terms of life cycle cost and risks. We're also continually developing. We have 2 new areas of development around nitrogen species and arsenic stabilization at the moment. And now we're getting to really the value and the recurring revenue, the value generation piece. So, what's important here is to understand that when we get, for example, operating contracts, these contracts are not based on, man hours. They're not based on $50 an hour. They're based on a tolling fee per cubic meter of water, clean water, treated, discharged according to certain standards. So we're trying to, these tolling fees are really capturing the value that we bring to the clients. And obviously the value we generate comes in one of these 3 forms, where the clients see the value in not having any disruptions to their production. The last thing they want is to have an environmental fine against them or a local community shutting them down. Obviously, if our approach can fast track their permitting, it's hugely valuable to them. Reduce capital and operating cost, hugely valuable. And we also generate extra value by, in certain cases, recovering value from waste. So we have systems for metal recovery. Our system can reduce bonding costs. It's super important because bonding comes at the front of the project. It's part of the CapEx. It's basically money that's tied up. If we can reduce the bond, that frees up cash to our clients to use more productively. And finally, if you can actually demonstrate very proactive approach to water management and treatment, you can actually improve financing terms as well, because the international lenders are now paying attention to those aspects of mining projects. Talking about the addressable mining market, it's important to understand that we have we play in a segment of the small segment of this market. As I said, there's tens of thousands of projects, and we don't chase every one project. We chase only projects where, you know, our expertise and IP gives us an advantage, differentiates us from our competition, protects our margins, and creates value to the clients. You know, the addressable market is increasing both because of the regulators are creating the market for us, you know, and the public scrutiny is creating more and more market opportunities for us. But it's also growing because the overall general mining market is growing. So, you know, it goes through ups and downs and cycles, but overall in the long term, you know, metal production is increasing generally. This slide shows you the approximate value that we extract from the projects. It showed basically an average project. These numbers are approximate, but they're real in a sense that they're taken from the actual project portfolio that we have. So you can see that during the development and permitting stages of the mining projects, we're probably making about $1.5 million over 5 years, about, you know, over 20 million in, you know, 15 years of the mine operation on average, and then a little bit in the closure. So overall, throughout the mine life cycle, we make about $26 million over 30 years from an individual project. So what's really important is for you to understand that the majority of this revenue is recurring and really happens over decades, if you will. So, you know, if you kind of extrapolate and say, okay, we do 2 projects, we basically we build 2 plants that transition into operation every year for 20 years. You know, we would have 40 projects that would generate about $1 billion over 20 years. And interestingly, it would be only less than 0.1% of the global market. So again, I'm stressing here, our company is not about grabbing market share, but it's about the value and the steady returns and recurring revenue. Just a snapshot of our last year or so of projects. So over the course of last year, we commissioned and started operating 2 SART plants for cyanide recycle at gold extraction plants in China. We're recovering copper and zinc at those plants. The copper and zinc belongs to the clients. We get paid basically based on the performance of the plant as through the tolling fees. We also have a project in Ecuador, one of the latest copper producing mines to come online to look after water management and treatment. We're piloting for a new project, demonstrating treatment for one of our clients to help them through permitting. Importantly, we commissioned and operated our first Selenex plant for the selenium removal plant, the technology that we commercialized. And we're building 2 new plants. One of them is in the United States at an ash pond. So it's a U.S. power utility that has coal ash liabilities that they need to deal with that contain selenium, and another mine site that has a selenium problem. So that's just a snapshot of the last 12 months. You know, just looking at the company in overall, over the last 20 years or so, we built 24 treatment plants, commercialized 4 technologies. We're treating and discharging water over 20 million cubic meters a year. And in the process of doing so, you know, in these projects, we are recovering about 1,800 tons of valuable metals, about 1,000 tons of sodium cyanide. And in every single case, you know, our projects are either reducing or completely eliminating waste generation, solid waste residue generation. We have a global footprint, and importantly, these jurisdictions of North and South America and Asia are really the key sectors for the growth of the mining market. We have an office in not just Vancouver here, that's the head office, but also in Santiago, Chile, and in Hangzhou in China. just to let you know that, again, about our business model, we focus on our core competencies. And so our core competencies are the process treatment, process know-how, and all the services that I'm listing here as core competencies. What is not our core competency is, what Peter always calls pumps and pipes and concrete. The detailed engineering and construction management and all those other services, they're non-core, and the mining companies are better suited to manage those, or they can hire someone else for those. So we're really focusing on our core offering and core expertise. In terms of financial results, you can see that the company has really improved its financial performance since 2016, and in all aspects, in EBITDA, net income now, we're cash generators. Our working capital has grown, and most of our revenue is recurring. So far, the majority of the recurring revenue comes from the metals that we recover. The tolling fees are gradually growing, and that's really the component that's going to grow the most. Now, what's important to understand here, and why we feel our story is so exciting, is because if you think again about the business model, we have the upfront consulting, and then we have the back-end operations. It's the operations that generate most of the revenue. And really, we are really at the start when we are now transferring more plants into that recurring revenue operations stage. So, most of this turnaround that you see in this adjusted EBITDA, most of that turnaround happened through the consulting services, not through the operations. So when the operations actually kick in, these bars will grow much faster and higher. Just looking at our project pipeline to give you a sense of our projects and the drivers, you can see that most of our projects, almost 2/3, are driven by environmental compliance. They are not projects that are nice to have. They're projects that are must-have for the clients, right? Of course, there are other drivers such as water reuse, cyanide recycle, metal recovery, but in some cases, like the metal recovery piece, is a nice-to-have, not a must-have driver. That really protects us from the downsides in the industry, where it really doesn't matter whether the copper price is $2 a pound or $5 a pound. You've got to comply. Also, importantly, we don't really have strong competition, in a sense that close to 2/3 of our projects are sole sourced. We actually don't have a competitor to bid against. And most frequently, we compete against the mining company itself, in a sense that the mining companies sometimes think they can do it themselves, or they think that that's an alternative for them. In terms of technology, you can see that there is a great diversification. It's really all of those sectors we talked about, and really, a great testament again to this innovation piece is that the selenium market, and that really did not exist 5 years ago. Regulators created that market. We developed our technology. Now about 1/3 of our pipeline is related to that. So as we are developing the new pieces, such as the arsenic stabilization and nitrogen, those will hopefully grow our pipelines even more. We have a strong leadership team, and I would say that although the team is, other than Peter and I, quite young, they've all been with the company for close to 10 years. And that's super important for sort of creating the right culture in the company and having the continuity, having the succession to continue with on the path that we started. Just a snapshot here about our market cap and working capital here on this slide. You can see that the increase, and I think that's it.
Yeah, if I could, Paul and and David, could I add a little bit? Can you hear me clearly?
Please, yes, we can.
Yeah. Just for the investors listening, David described the 20 years the company's been in business, but David and I actually took over 5-6 years ago and completely turned around the company's strategy and revenue model. So it took a little time for that to kick in and everybody to accept that we was going to go in and operate. And I can certainly bore people with how we got to that position. But the industry, even 5 and 6 years ago, was not prepared to accept that. They are prepared to accept it today. We also concentrating on our core offering. One of the biggest failures I've seen in small companies is trying to be everything to everybody. And our competencies in mining. So the previous incumbents were trying oil and gas and power and everything like that. And we just said, no, mining is where our core competency is. So we stuck to mining, and ironically, last year, a power generator came to us. We didn't go looking for it. But one of the things that's important in business as well is it's no good inventing an answer to a problem that doesn't exist. And when David and I took over 5-6 years ago, we identified where the regulations are going. As David has talked about what we're doing for the future, 5-6 years ago, that's what we did with selenium. When we changed the strategy, we aligned ourselves with regulators, and that's actually happened. And the difference between us and other solutions out there is, for want of a better description, and if people want to get technical, we're the only non-biological solution out there for selenium. We can actually get down to below 1 part per billion, and regulations, depending on where they are, can be 2 parts per billion, or 3 or 5, but they're in them regions of when people are bringing in the regulations, and we are effectively today down lower than anybody else can get. And we're really at the cusp of a point as well, because in 2020 we had our first commercial selenium plant built, commissioned, and working. So that's alerted the industry to that particular problem being able to be answered in a different way. And as David has showed on the screen now, the financials have increased. Actually, when David and I took over, this company was losing 3 million. And we've grown that organically with the consultancy fees and that, but the consultancies are the lead into the operations. And David mentioned we're building another 2 currently this year in the US, one in power generation, one in mining, which will be exactly the strategy we're talking about. So although David describes 20 years for the build up of the technology and the know-how, the strategy that we're currently employing is really only 5 or 6 years old. And the reason for us starting to present now is because of the first commercial selenium plant coming on last year, and what a big market it is for it. And as an investor, and I've spent most of my life your side of the fence, our product is clean water. It's very simple. We supply clean water, for the mining guys. So I don't know what questions you, Paul, or Trevor have, but yeah. David and I are here to answer them if we can.
Well, certainly thank you for adding that, Peter. But why don't we dive right into the whole center of everything? You explained a little bit about the different services you provide, but do you guys have a secret sauce? Like, do you have what's your key IP that really does the magical work for you guys?
Yeah, so it's not a the magical. I wouldn't call it magical, but the nature of the IP is in the treatment process itself. So our plants use conventional equipment, right? Pumps, agitators, tanks, clarifiers, filters. It's only how you put them together, what conditions you use, and in some cases, it's also a knowledge of unique to the treatment process. We're not equipment vendor or fabricator, but we know which equipment to apply specifically to get a certain outcome. So the nature of our IP, we've got 4 patents. It's process. It's the treatment process. It's the chemistry around and the conditions in the process that lead to certain outcomes.
Perfect. And then give me a sense. I mean, you're relatively, I'll call you a relatively small company, but you're dealing in an industry that I mean, you're dealing with giants. Give me a sense of what the competitive landscape really looks like. Now, you did say that a number of these customers look to do the work themselves, and I'm sure they hire consultants all over the place. But specifically to clean water, to sort of process and things like that, what's the competitive landscape look like?
So again, Paul, I think I want to emphasize that as I have presented, in 2/3 of the cases, we actually don't have competitors, truly don't. And there's several reasons for that. One is that, as I said, we don't chase every single project. Part of our strategy is to screen new projects and business opportunities very early on and differentiate between projects where we have something that others cannot offer. And it's the value of our IP that generates that again, non-competition for us, while at the same time providing value for the client. So if we identify a project where we know, hey, our IP is just a perfect fit for this, and the competition is really not there, and as Peter said, in some cases there's literally no one else can do it with selenium, then we chase those very aggressively. And we limit ourselves. I would say we do maybe 2 competitive bids, like responding to bids out there that we know there's more than 5 people bidding, maybe 2 a year. But in terms of the competitive landscape, truly in a sense of the consulting services, again, I want to say that we are really a company that offers the single point of accountability. You have many consultants who come in and play a key role at a certain point in the project, but to have someone involved who can take the project from very early stage, from the conceptual stage, get it through permitting, design and build a plant, operate it, guarantee the performance, and stay for the closure, that's very, very unusual. And that continuity is very important to the industry. I can give you an example of one of our projects where we've been operating now at one of the mines in Quebec for 16 years. The mine has changed ownership 3 times during the 16 years, and their management changed 8 times every 2 years. When the new management comes in, they actually don't know why they're doing what they're doing about water. They always look to us and say, okay, why are we doing this? So providing this continuity to the industry is actually hugely valuable to these companies. And that, again, differentiates us from the competition and sort of generates for us the environment of niche, non-competition.
Yeah. I would add, David, another descriptive, a good descriptive is the selenium plant we built last year. The miner had to build the water plant before anything. It's $1 billion project, and the $1 billion project was predicated on them getting down to below 2 parts per billion. They literally had no other choice. So they had to build the water plant, which we supplied the process to. So they effectively had to spend, with all their civil works and everything, effectively 25 or 30 million to prove that they could actually build the $1 billion project. So it's getting to the stage now where regulators are saying, well, no, you prove you can treat the water like that before you do it. And so they've now done that, and now the powers that be in that company are trying to get the $1 billion together to actually implement the building of the mine. But it's actually changed that much in the regulations out there, especially for selenium.
Yeah. Why don't we talk a little bit about just the sales process? How do you guys land your consulting contracts, which hopefully lead to these project wins? How do you knock on doors? Do you what do you do? Give us a sense.
Yeah, I think the mining industry is very incestuous, if you will.
Mm-hmm.
The circle of people, the connections, it's a very tight group. And one of the most valuable assets for us is really our name and reputation. So I've been in the industry now for over 25 years, and it's the networking and contacts in the industry that are very critical to us. And the success or failure, if you will, of projects carry a lot of weight. So the success of our previous projects are like a snowball, and you can also imagine that in the industry that's really subject to consolidation all the time, you have several top producers who own most of the mines. Obviously, it's very different for the gold sector, very different from the copper sector, for example. But what I'm trying to say is, if you have as your customer companies like Freeport, Hudbay Minerals, Newmont, or JCC, they have multiple sites, so you don't actually have to keep knocking on doors. And within the portfolio of their projects around the world, they bring the consultants and bring the companies, the suppliers and service providers along with them. So it's a mixed bag, Paul. I hope I answered your question clearly.
No, and that's kind of what I was hoping you'd sort of enlighten, is just that. I mean, it's a small sort of, I'd almost say, old boys network that everybody kind of knows everybody, and there's a couple handful of very large players that have their hands on a lot of different projects that ultimately is where you get your business from. Now, selenium, I've heard that word over and over again. Maybe give us a sense of how many projects are potentially out there that really have a selenium issue that you guys could answer?
Yeah, so that's very interesting. So if you asked me that question 5 years ago,
Mm-hmm.
I would probably say, I'm not sure, maybe 2 in Canada. And the reason for that is because nobody actually measured selenium in their waters yet.
Mm-hmm.
And the regulations were just coming in, and there was a problem even with the analysis and the detection limits to detect selenium in waters, right? So, and the other issue, of course, around selenium is that it's a long-term chronic issue. It's not an acute lethal toxicity issue. So in order to see the environmental impacts, you basically have to wait for many years for the chronic toxicity to manifest. Now, everybody has to measure selenium in their discharges. Everybody pays attention to selenium during exploration. I would just say, I don't know the exact answer about the number of selenium projects, but I would just give you a snapshot from Canada. So I believe there's 35 projects currently in the environmental impact statement phase being reviewed by the federal regulators. And out of the 35, 25 have identified selenium as a potential constituent of concern and have to do something about it during the permitting process. Whether or not or how that plays out in the real mining operation, we don't know. But significant majority of the new mines in Canada have identified selenium presence. And that's really important to understand, that selenium is not a coal mine issue. Selenium is really in all the mineral deposits where you have sulfur compounds. It could be in a gold mine, copper mine, coal mine, zinc, lead. It's across the commodity spectrum.
And I mean, are all countries starting to regulate selenium, or is it still relatively new as far as the different jurisdictions?
So the most aggressive and up-to-date regulations are in the US and Canada, and
Okay.
that's where the majority of the projects are currently. Europe is way behind, but they have very little mining actually. The European market is not a very strong mining market.
Right.
It's really the South and North America that's important here. And in South America, we currently have 2 projects around selenium there. The issue with South America, of course, is the enforcement.
Right.
Unlike in the US and Canada, where you have the regulations, but you also enforce it, in some of these countries in South America, the enforcement is actually lacking still. But at the same time, you can see the rise of social pressure on all these governments to do a better job. So I'm not sure whether people follow the news in places like Peru, Colombia, Ecuador. I mean, the local communities are getting more and more voice and power, and they will, ensure. I think that pressure will ensure that the regulators do a better job of enforcing. But the regulations are already there.
Yeah, gotcha. That's interesting. Can you give us a sense of, because I mean you've got consulting, you've got project-based revenue, different metals and things like that you recover, but just a general ballpark, how can we model out sort of gross margins looking forward? How would you advise us to kind of look at modeling this thing out?
Yeah, so I think that I can go back to this slide here and say, this is an average project, okay? There's going to be projects that are way better than this and projects that are smaller than this. But each one will have this, 3-phase profile. And you can model it in a way that approximate 50% margin all across. So, obviously there will be projects with higher margins and lower margins, but on average, we're looking at 50% margin and these kinds of revenues per project.
Right. And do you guys have a backlog or bookings number that you've made public?
No, we don't.
Okay.
We haven't. And
okay.
So far, we also try to stay away from any guidance.
Right.
And part of this is there may come point in time in the future where we will provide this information. But what we really, as I pointed out on the slide with the financials, most of our sort of turnaround of the company has come from the consulting side of the business, not from the operating fees yet, right? We do have significant part of those operating fees now, but it's still only 60% of the total. But that's going to grow quite aggressively, whereas the consulting fees will stay more or less where they are at. They may increase, a little bit, but they're fundamentally going to stay relatively constant and grow maybe a little. What's going to change is we're going to be adding on these operations one by one from that resulted from these consulting projects now. And the reason why we didn't want to do guidance is because in the consulting business, you never know. I mean, we had lots of projects that we had no idea about. They would come in 3 months from now. There are projects that get delayed by half a year. We would look completely silly if we put out guidance.
Yeah, fully understand. It's a very volatile sort of industry that's subject to a lot of different parameters. Customer concentration. Do you have one customer that carries a lot of your revenue, or how would you describe the breakdown of the different customers that you have?
That's a very good question. We don't have any one major company or client accounting for, I'd say, more than 15% of the total revenue at this stage. We do have, in terms of the recurring revenue, as the metal prices increase now, and you will probably see it in our financials for the next quarter, obviously the fees we get from metals that we recover, when the commodity price is high, suddenly jumps up. and so I would say there is sensitivity not to individual clients, but given the very beginning of where we are at right now, we still have relatively modest revenue and EBITDA. You know, the sensitivity of those figures to the metal prices is still there, and it's actually quite significant.
And which metals are you most sort of levered to?
Mostly copper.
Copper.
Yeah.
We have some zinc and we have some nickel, but it's mostly copper.
And I will add, Paul, that that's part of the change in strategy and going to operations is so we mitigate that issue going forward. So historically, we've got that recurring revenue from metals, but that's not how the revenue model goes forward. Although we will keep them businesses going for as long as we can. But that's why we earn our money out of operations now, a tolling fee per cube of water. We don't want to be at risk for the metals markets.
Yeah, for sure. I got a couple more questions and we'll just open it up. I see there's a small handful of questions from the listeners. M&A, do you guys look at any M&A for your business? Is that even in the plans anywhere?
We look. We got to the stage, Paul, where, you know, when David and I took over, the company was losing $3 million a year. We looked at what our burn rate was, and we said, when do we start? Look, when have we got a large enough cash buffer for a 12-month period, which is roughly $3 million? You know, as we grow, that number might change slightly. We've only really just got to that point, so we're looking at a couple of things. We have looked in the past. But, you know, we're very, very protective of where we're at and our growth and whatever. And there may well be some of that in the future, but we're just looking at the moment.
Gotcha. Thank you.
So if something interesting comes along, a single person operator or something like that, we're not big enough yet to take on any big entity, but there may be some things in the pipeline.
Okay. Fair enough. And then just the stock, you've got a very, one of the smallest amounts of shares outstanding I've seen in a long time, 1.24 million shares outstanding. What percentage is owned by insiders or any significant, investors?
Somewhere between like middle 50 odd percent, 50 something.
50?
Yeah.
Okay, so about 50%. Okay.
Yeah, and in doing that, and as you can see, there's not a lot traded. We have the problem that our shareholders seem to like what we're doing. So it's actually getting some to sell. They often come to us and say liquidity,
Yeah.
and we go, well, none of you guys will sell. So it's at what point do they?
Yeah. Well, I mean, you're a small company trading with a $30 share price on the venture exchange, which is pretty rare. And I do understand you guys did a consolidation a little while ago, but now do you look at possibly doing the opposite and doing a share split to try to open up a little bit more sort of volume?
I sometimes look at it, Paul, in a very different way. Is the reality is if the retail investor thinks like that, but the institutional investor thinks, what am I getting of the company?
Exactly.
And, obviously we'd like to get, the aim is to get, as much retail as we can in, but the institutional investor. So it doesn't matter if we have, if they have 10 shares or 100 shares, it's what percentage of the company they're getting. And liquidity wise, we're actually more liquid now than we was when we had 100 times the shares.
Right.
So we've actually, and everybody, when we did the consolidation, everybody said, not everybody, but most everybody said we was wrong. Two of the major shareholders agreed with us. And David and I went and did a roadshow with shareholders explaining why we was doing it. We've had many apology letters since because it's gone from $6 to 32.
I would hope so. Yeah, I would hope so. At least.
but maybe people use us as an example because most times them consolidations are done for the wrong reasons.
Right.
They're not done for the right reasons. But the reality is, yes, we do look at expensive stock. There is only 1.2 million shares, but it's, as you look, we've done everything to not dilute our shareholders, to not do anything. not do anything untoward. So we are very, very protective of shareholders and how we are going forward. You know, we've shown in history the way we want to be in the future.
Very good, very good, and I agree with you. That makes sense. So a couple questions here that we've got from some listeners, and one of them right now is, what are your biggest challenges right now?
Actually, David, if I could pick that up, it's growth. You know, David identified in the slide you're seeing there 2 projects annually. With all the consultancy we're doing and the 2 projects we're building annually now, we're looking for people, and it's going to be our growth now because it's come and hit us this year. We're trying to manage it, but I consider that our biggest problem. David, anything you'd like to add?
No, I think that's right. I think that's definitely our major.
What's your staffing level right now? People have working for you.
So between the 3 offices, we have 47 people full-time. And then we have, you know, in the operations, we have actually a variable number of people because some of these operations are only seasonal. So during the peak of operation of all the plants, we're probably close to 70 people. But some of them are only seasonal. So we fluctuate, you know, I'd say between 50 and 70 people currently. And as Peter said, you know, we're actually hiring. So the team is growing now. The numbers are probably higher than what I mentioned. That's probably looking backwards.
Great, gotcha. Okay, another question here. See, we have somebody asking, it seems like there's been a bit of a pause on new contract wins. How is the sales pipeline currently?
Well, I'm not sure. It seems to come from an investor who's been following us for a while, and so, you know, contract wins. I would just say that we're very careful with our announcements. We don't announce every contract and every win, right? We obviously are obligated, and we do, you know, press release all material size contracts. But for us, you know, what is the material size contract? You know, is it $50,000? Is it $200,000? And also you have to be very sensitive to the clients. Quite often our clients don't want their names to be, you know, out there in the public associated with their projects, and sort of pointing attention to environmental compliance in their projects. So, you know, for all of these reasons, our press releases are maybe not as many as we could be pumping out. I certainly don't feel that we had any hiatus in winning projects, but, you know, judging from the press releases, maybe there is a window where we haven't press released anything new major for a while. But at least from where we sit, Peter and I, you know, nothing's really changed. We're executing as normal. The financials will speak for themselves, and the press releases will come when they come. You know, the timing of them is difficult to predict, but there has not been any major project that we lost, or, you know, the project was canceled, or something that we intentionally did not disclose. I mean, the financials will speak for themselves, and like I said, you know, I would invite people to actually subscribe to our newsletter, where, you know, we have press releases, of course, press releases, but we also communicate with our, you know, general community of partners and clients and investors through our newsletters, and we put them out twice a year. And investors would be invited to sign up for these on our website.
Okay, so they can just go to their website to subscribe. Okay.
I will add, Paul, that we, you know, we've done an exercise, you know, that we do every now and then, of our future pipeline. And I have to say that David's quite right. We're very much of the opinion, and certainly, of under promise and over deliver. We're not. You can hear us talking now, and we don't want to be overly promotional, but we know it is the time to start talking about what we do. But in looking at our pipeline, we're very, very happy with exactly that screen sitting in front of you now. Anything that goes over 2 projects a year annually, it would be an even bigger problem for us growth-wise, because it's a very heavy investment of man hours in the consultancy that leads up to the building of a plant, the engineering design and everything that goes on there. So, we're as I said, I don't want to put anybody unnecessarily inside, but we're very, very happy with the pipeline we've got.
Great, great. And this kind of goes to the last question. We sort of touched a little bit on this, but I mean, how scalable is your business apart from sort of the manual sort of part of consulting? Once that is done, how scalable is? I mean, can you add 3 or 4 projects without materially changing your business per year?
I think, and David will probably answer this better than I will, but as an investor, or from the investment side, Paul, I look at it and the size of the company we are, to get massive penetration on the market, it may well take, one of the majors could come in. I'm certainly not saying that's happening or whatever. I don't want to mislead anyone, but one of the majors can come in with their many hundreds, if not thousands of people, and do this a lot quicker than we could. We're going to be doing it at a slower pace. And does that mean that someone comes in alongside? Like, we're currently working with Westtech. They approached us on the Ash Pond market. We're very, very happy to have them in that sector because they're known in that sector and we're not known in that sector. So there may be more and more things come along like that where we give them part of the business to help us scale up what we can do. But it's going to be slowly and gradually going along. But yeah, we will get to 3 or 4 at some stage.
I think, Paul, what's really important here is the understanding of the leverage of the company to the tolling fees, right? So the consulting business, we all know you're basically selling your life's energy, your man hours, right?
Yeah,
and you grow revenue by man hours. But where really the leverage comes in is through the operating fees. And as I said, the plant that generates 1.5 million a year has only 5 people to run it, right? So we have a 50 people business now with our annual revenues, whatever they are, 12, 14 million. But then, we have 5 people for additional 1.5 million for each plant that we built. Let's say it takes 5 people to run it on average, okay? So that leverage really tells you that as long as we do a good job of the operations piece, as these plants come online, the scalability through these revenues is not going to come from the consulting business. It's really from these plants.
Yeah, it makes complete sense. That's what I was hoping to hear. It's sort of time to wrap up, and I always ask this question, but as investors, what do you think are the important metrics that we should be watching to really determine whether you guys are successful in executing your business?
So I think it's obviously a mixture. Financials are very important. We can start with those. And, certainly people should see the trajectory continuing in, having plenty of cash in our treasury, having solid revenue, EBITDA growth, earnings growth. But I think, beyond that, because our business really, to follow our business on a quarterly basis is very difficult, yeah? I feel that, this quarterly reporting misleads people. We sometimes get investors calling us, oh, you had a bad quarter, what's happening? Our business is not quarter to quarter. As I mentioned throughout the presentation, this is a long-term business. Our projects are decade long. our consulting fees are lumpy, and as long as they dominate our revenue by the quarter, we're gonna be lumpy. But it's really important to look at the company at least on an annual basis, okay, in that kind of time frame, half a year or at least a year, because some of these revenues are also seasonal, right? So they depend on weather, etc. So really stay away from following us quarter to quarter. Please follow us quarter to quarter, absolutely. But don't make investment decisions based on, oh, this was a really good solid quarter, or this was crappy one, they're going down the toilet. Don't get dismayed by some of these fluctuations. These fluctuations should go away gradually as more and more of these plants come online, and the recurring revenue basically provides a solid, steady part of the total revenue EBITDA earnings that should not be fluctuating quarter by quarter.
Yeah.
But the other piece that's really important is the news, the announcements, and like as I said, we're very, very selective as to what we put out. But when we put out these announcements, they are truly significant, and people should pay attention to those. Some of them may have an immediate impact because they're announcing new contracts. Some of them may have a strategic long-term impact. Follow those announcements because they're truly, I mean, we're very selective as to what we put out. It has to be material, meaningful, with a long-term impact for the company.
Fantastic.
And I will say, Paul, that both David and I are very, we constantly talk with shareholders, and we're not, you get companies where you can't get to people. I'm executive chair, David's CEO, and our shareholders will often write to us or call us, and we tend to answer them straight away. We're not with any questions they might have. But you will see the reflection. I mean, even if you don't invest in this, you will see over time the mitigation of that fluctuation David's talking about. That's part of the strategy we built, and we're seeing now.
Great, thanks. Okay, so we're sort of at the point where I give you guys a chance to leave any kind of parting message, anything that I've either missed that I should have asked, or any key takeaway that you want investors to sort of leave with today. I'll just leave it over to you, and you guys give us that sort of parting message.
Yeah, sure. I know in speaking to you earlier, I think we're, BQE, we're just starting to talk about this story. We're at a really sweet spot, and I'm sorry if that sounds promotional, but for ESG, for clean water, for just that whole sweet spot where we're looking at. And if we was describing this as a brand new company that had just done what David and I have done in the 5-6 years, and said that we was on the cusp of turning now, the revenue we've got, the EBITDA, the amount of plants built, the amount of IP, the SART that we really haven't talked about, the regeneration of cyanide, which we're now considered to be the leader in as well. If we brought this to you guys as a new company, it'd be very easy to see this at 2-3 times its current valuation easily. If it was we was asking for money from the market. We're not asking for money from the market. So what happens, of course, is that the major houses, the Canacords of this world, are not interested unless they're earning fees out of it. So, we really enjoyed talking to you and your colleagues before, and I think, you're the first organisation that we've come across that actually seems to care about the investors, not actually getting, giving them the best stories they can give them. And, I'd moved to America. I'd been in this business for well over 30 years. I'd done what I was doing, but working alongside David doing this sort of, brought me back into the fold, really, because I totally believe in the story, and David and I are completely aligned on the strategy forward. So I'll just add that this is, as an investor, and I got about 4% of the company, which I purchased at different levels, because I totally believe in it. So, David, any close? And obviously, thank you for everyone who's joined us to listen.
Thank you. David, anything you'd like to add?
Yeah, I think, you know, from my end, I just want to reiterate we're at an exciting stage in I guess the life of the company, and also the sector overall. You know, it probably rarely happens that you have the intersection or alignment of so many things going in the same direction at the same time. But you know, the regulations are truly driving the growth of our market. The mining companies are needing to make their projects socially acceptable. You know, water is such a critical element of that, that you know, that the market will grow. The other aspect I wanted to mention is that the overall trend in the industry is that the mining companies outsourced all of their sort of services, or the trend is that they're outsourcing more and more. I mean, it used to be every mining company had their own R&D department. None of them have them anymore. So the innovation for environmental compliance is not going to come from within the mining companies. It's going to come from service providers like BQE Water. And along with that is the responsibility for the performance. And I just think that, you know, the alignment of our business model with these trends in the industry and the overall general trends in the ESG space make this really exciting times for us, for the company, and for the whole sector.
I agree. Well, listen, thank you so much. We love it when we can find these neat little companies that are doing some great things. So we certainly thank you guys for your time today. Now, you mentioned the newsletter, but if anyone wants to subscribe to the newsletter or needs more information, what's your website address?
BQEwater.com. Yeah.
Simple, BQEwater.com. That's perfect. David and Peter, I want to thank you one last time for joining us today on behalf of everybody listening today. Continued success, and we really look forward to hopefully catching up with you guys in the very near future.
Thank you
Thank you very much. Thank you very much, Paul. Thank you.